Hello everybody and welcome to another financial analysis video. My name is Ted Wainman, and in this video we are going to be looking at NIO, which is an electric car company from China. So here we go. NIO is a Chinese multinational automobile manufacturer headquarters in Shanghai, specializing in designing and developing electric vehicles. Company also involved in the FIA Formula E, the Formula Electric Championship, although NIO has ended funding the team after selling to Lisheng Racing. So that is what they do, and what we are going to do today is look at their financial performance. Now, this is a request from a couple of viewers, in fact. Mano SP3 and Robert S, both of you have requested this, so we are going to look at the numbers. So a couple of things before we dive straight in. First of all, this is financial analysis. This is backward looking. So I still get comments from people saying that, you know, this is woefully out of date. Well, welcome to the world of financial analysis. Okay, we're looking backwards. We're looking at past performance. We're not looking at the future of the company. So if you are using this as part of your investment, you have to do your own homework in terms of where the company is going, the market, the growth, the contracts they're signing, the management team, etc., etc., etc. We are just doing the financial analysis, but you are welcome to continue to leave comments about how this is very backward looking. Just please do be polite in the comments. So that's the first thing. Second of all, please do, if you do find this useful, do like, share, subscribe to the channel. If you subscribe and you ask for a video and we actually get around to doing it, and we do have quite a lot on the list at the moment, so I'm not sure I'm going to be able to get everybody's request in, but you will get a notification of when your request is analyzed. And also, don't forget, this isn't just for investors. This is for people who are, you know, maybe studying to become accountants. Maybe they are, you know, they're in the finance team. They want to understand financial statements. So anybody looking to improve their knowledge of just reading and interpreting financial information, this is just as useful for you guys. Anyway, so without further ado, let's get stuck in and have a look at NIO. So here is their financial statements. This is Form 20F, which is available on their website, and 20F has lots of information about the company, but we are going to scroll all the way through to the actual financial statements, which we will find on page 162 of a 575-page report. And so let's start off with the income statement. Here is the income statement. So what you're going to notice is that this is given to you in RMB, in thousands, and then the last column is giving it to you in US dollars. So there's the US dollars if you want to think in dollars, but they are accounting and reporting in RMB. So there we go. And we're looking at the 2020 column, which is this one here, and we notice significant increase in sales. Okay, so this is in thousands. So just to give us an idea, so 2,000 million is about $2.3 billion worth of sales. Significant increase on previous year, so effectively they're doubling, almost doubling every single year, certainly 108% year on year, and 58% from 2018 to 2019, so pretty much doubling. What you'll also notice is if you do the calculation in terms of the gross margin, so we're looking at this column, this row here, is that first of all, they are now starting to make a profit. So they are actually trading at a profit, not a massive margin, but it's 12%, which is better than previous periods where they've actually been trading at a loss. So the gross margin is now coming into kind of profitability. However, the overall operations of the business, they are still operating at a loss. That's this line here. Operations coming down, so the loss from operations significantly coming down, 200% 2 years ago, 142% last year. It's negative 28% this year, so they're still at a loss, but this is a volume game, and you know the theory is once they hit critical volume, then they'll cover their fixed overheads and start making a profit, a little bit like Tesla have started to do recently. So this company is growing. They are loss making, but it looks to me like the kind of the end is in sight of that kind of loss making, and they're going to start generating profits, which is good. So there's the income statement. Let's go and have a look at the balance sheet and see what's going on the balance sheet. So here are the assets of the business. Once again, we've got the sort of the two columns in RMB, and then the last column is just the 2020 in dollars for you. And we are looking here at 2020, and what jumps out at us in terms of the current assets, big increase in current assets. And what's driving that? Lots and lots of cash. So it looks to me like this company has done a lot of fundraising, and we will check and be able to see that a little bit further down in the bottom part of the balance sheet and in the cash flow statement. So they've got lots of cash, and when we're talking about cash, we probably just need to actually just include all of these numbers. All of these three numbers will basically be cash, or near cash, or cash equivalents. A few trade receivables, not a big amount of trade receivables, suggesting that if they are selling their cars, they're not financing it themselves. They're outsourcing the financing, and then they've got some inventory as well, which you would expect. In terms of the non-current assets, interesting enough, the non-current assets has actually dropped year on year. Not a massive amount going on. So you look at the property, plant and equipment, looks like there's been some depreciation going on, maybe not replacing it quite as quickly as they might need to at some point in the future, but holding reasonably steady there. So those are the assets side. Let's go and have a look at the liabilities. So first of all, just here are the current liabilities, and we almost don't need to do it, but we'll highlight it anyway. Is from a liquidity point of view, these guys are very liquid. So if I'm a supplier, I'm not worried about these guys not being able to pay my invoice, really, because they've just got a ton of cash which they've raised, and they've parked it in their balance sheet, in their bank account. So trade and other payables increased significantly. Is that an issue? I don't know. I don't think so. It looks to me like they look quite tough negotiators. There's a kind of an indication, a sort of back of an envelope calculation suggests it takes them 113 days to pay their suppliers. It sounds quite a long time to me, but that's probably just more their cash management rather than the fact that they can't afford to, because don't forget they do have lots of cash sitting in the bank. Let's scroll down a little bit further and see what else is going on the balance sheet, and we notice that they have some long-term borrowings. Interesting enough, the long-term borrowings has fallen, so they're actually kind of reduced their debt, and there's a sort of short-term borrowings which is really sort of staying constant, and this will be merely the kind of the short-term portion of the long-term bonds. If you have lots of debt funding a business, some of it will be repayable next year, and some of it will be repayable out in the future, and that's just that distinction there. And typically a company like this would be looking to refinance anyway, so they're going to go and they're going to borrow money in order to repay the loan, and we'll see that again when we look at the cash flow. So there's the balance sheet. Just coming down here to the equity. Now, interesting enough, these guys got what's called mezzanine equity. So mezzanine equity is kind of somewhere between debt and equity. And we don't have to go into kind of the detail, but you can kind of think about, do I classify it as debt? Do I classify it as equity? They've just put it in as an extra line. So if you're trying to make your balance sheet balance, do make sure that you include that in your calculations. And then down here, we've got the actual the shareholders equity, and it's a positive number. It was a deficit. So previously they had their assets were less than their liabilities. That's technically insolvent, not actually insolvent, but just technically insolvent. Not a nice place to be. It's a bit like being in negative equity on your house. So these guys, they've now got a positive balance sheet, and the reason they got a positive balance sheet is that you can see here that the additional paid in capital has significantly gone up. So what we're kind of saying here is that they've raised about 80 billion in investment, and they've burnt through about 52 billion of loss, and it looks to me like there's probably a little bit more losses to come, maybe 1 or 2 years before they actually hit that kind of that golden profitability, and then things start to get a little bit sweeter. So that's kind of where the balance sheet is telling us. So looks a pretty healthy company. We can look at the movement in equity. Not a lot to kind of really get excited about an equity. There's a bit of accounting adjustment here on this kind of convertible preferred shares. I'm not going to get sort of too stuck into that. They're not paying out dividends, but then we wouldn't expect them to be paying out dividends. So the last thing is the cash flow. Now the cash flow is quite small numbers here, so let me just see if I can just grow or just make it a little bit bigger so we can see it in more detail. Again, 2018, 19, 20, we're interested in the right hand column, which is the 2020 figures. And this is very, very good news that the company is now starting to generate cash. So previous years they have been burning cash, and now they are actually starting to generate cash, which is excellent news. You could argue that this is kind of driven by the fact that there's this big increase in trade and notes payable. So effectively, it's basically saying that they're generating cash because they're not paying their suppliers. So, there's a kind of, that might be a question mark, and you might think, well, hold on a sec, is the core business really generating cash? But even without that, they are getting very, very close to it. So generating cash, which is good. Just scroll down a little bit further and we see, there's investment going on. Previous year, interesting enough, there was some divestment. So again, this isn't really there's a bit of a distortion. These top numbers here is really money being parked into deposit accounts and taken out of deposit accounts. So it's not really investing in the business. So what we would be better off doing is just ignoring these numbers in terms of NIO actually investing in plant machinery and equipment. And the answer is that they're not doing a huge amount of investment. I think they've done that investment. They've got all the infrastructure. They now just need to start producing the cars and turning a profit. Down the bottom part of the cash flow, here we see the money that's being raised. So we'll notice here, so the money provided by financing, 41 billion, very, very significant. Biggest number here is the proceeds from the issue of ordinary shares, 34.6 billion. A little bit more sort of capital injection going on here. And then you'll also notice a bit of this kind of proceeds and redemption of debt. So these two numbers here, and again in previous years as well, is this is the debt refinancing effectively. So often when you see proceeds and repayments of, they're borrowing money to repay the money, that's just debt refinancing. So that's not a major issue. Anyway, so effectively, this company, what we're saying is that if they're not cash positive, they're very close to being cash positive. They're not quite profitable, but they're trading profitably, but they are, they're still making a loss. But we expect that to to turn. They have a very strong balance sheet. They've got tons and tons of cash from a share issue. So they've got that parked on the balance sheet, and they're kind of saying, look, we're not going anywhere for a while. So looking pretty strong here. Let's go and have a look at their share price and see how that's been performing. So kind of taken off 2020 there you can see, and it's now starting to really accelerate up, and it's looking pretty good. And then it's kind of in a consolidation phase. So if you were an early stage investor 2020, congratulations, you're seeing on a very big profit. Do you take your profits, or do you hodl, as they talk about, which is kind of hold on for dear life? I don't know, but the market cap is about 59 or 60 billion. Now do remember that's 60 billion US dollars. And my back of an envelope calculation reckons that's about 386 billion RMB. So if you're valuing it on that, obviously there's no multiple of earnings because there's no earnings, there's no yield. You are at about 1,112% premium to the the net asset value. Don't forget the net asset value is about 32 billion, and this is a valuation of 386 billion. So really there's a lot of jam tomorrow cooked into this valuation, and this is getting slightly into Tesla territory in terms of really quite a lot of exuberance in there. 24 times sales, if that's a key metric for you. So you know, it looks a good company. It looks like, you know, financially it's pretty solid. It's not going to go anywhere. It's not going to fall over in the short term. You know, big market out there, so very exciting. And if they can capitalize on that market, then, you know, maybe this is a company that can go to the sky. But, you know, just to bear in mind, you know, there's a lot of good news, and a lot of that looks like it's baked into the share price. So there's not a lot of room for downside effectively. So there's our analysis of NEO. I hope you found that useful. You know, it's backward looking, you know, as financial analysis is, but we've got a company here which is, you know, it's got a lot of cash on the balance sheet. It looks like it's going to be making a profit and generating cash pretty soon. And so it's not going to go anywhere. It's just whether, you know, whether you're getting something at a bargain price. I'm not sure it's a kind of a bargain basement screaming buy at me, or whether you might want to have as part of your diversified portfolio. So once again, I hope you found that useful. Don't forget to like, share, and subscribe to the channel. And I look forward to seeing you on the next financial analysis video.